Well, let's get to the final trade of the day. Investors and traders clearly are concerned about what's going on with coronavirus and the economy. Let's bring in Todd Colvin of AMBROSINO Brothers. And Todd, gold is viewed as a safe haven play. Did you see money rushing into gold?
Well, gold's been on pretty much a bumpy trail here. We've seen it trade from 1,700 to 1,750, pretty much in that range. Going back to the beginning of April, we've seen it extend the top of that range once or twice. We did see it dip below just before the Fed meeting this week. And I think at this point right now, today, yesterday with stocks trading off, we saw another bid to gold. The range is held. We got up to 1,750, that high. And then I think we saw some profit taking because right now gold should be going higher based on what the Fed's done, based on what the Fed is going to continue to do. And looking at the dollar's been trending lower. Yeah, it had an up trade yesterday, but ultimately the dollar's going to continue lower with all of what the Fed's doing and will continue to do with what we learned this week at June FOMC.
Are you surprised there was not a bigger move in gold?
Yeah, it's been a nice hedge to own gold as equities have been nearing the top, nearing those all-time highs, because obviously it can't stay up there forever. So many think. At this point, though, I was a little surprised yesterday that gold didn't catch more of it. It was still up, $13-14 after trading down from 1,750 back to 1,735. So at this point, I think the gold trade, you have to be patient. The fundamentals that we've seen from what the Fed has done, from lowering the interest rate to zero to putting in place policies that will keep the markets flush with cash, and the idea that it's going to stay that way for quite a long time, suggests to me that gold prices today will be very cheap, down the road in third and fourth quarter.
In your mind, what will be a signal that things are about to get a whole lot worse in this market?
Well, I think right now 1760 is a pretty critical level. If you can trade north of 1760 and sustain it, you get one trade pop up there, and then the next day we come back down. It's obviously going to be a quick profit taking, but a lot of the profit taking we're seeing is around 1750. So if you can get a sustained trade north of 1760, I think that's a sign that gold buyers are going to be in for a little bit of a longer haul here and are maybe abandoning that 1700 to 1750 range that we've seen for quite some time.
What about things getting better? What would that signal look like?
Well, gold right now with equities still elevated. I know we saw a big sell-off yesterday, and I know that things are still very volatile across the board. But you get a trade down south of 1650, you're going to probably have to suggest to yourself, well, maybe the gold buyers are going to take a break. Maybe they found something else. At this point, Treasury yields remain, stubbornly low, so that's not going to steal money away from the gold market. But the equity markets on a dip will find buyers. That fear of missing out, that we've talked about for so long. You will see money move out of gold into equities when things get bad enough that maybe they look too good to be true, that equities you didn't think were going to get back down to this level. But 1650 would be a level I would be weary technically in the gold market, and that's obviously not anywhere close to where we're trading today.
Todd, always good to have you here. Thanks so much for helping us out today.
Thank you.
More Business First AM. Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.